Ticker symbol DGRO, or the iShares Core Dividend Growth ETF, is one of the most popular dividend growth style ETFs across the entire market, and this is for several important reasons. Now first, this ETF has grown like crazy over time, which I'm going to show you in a second here as far as price return. But on top of that, this ETF also pays a decent starting dividend yield and has some massive dividend growth historically. But in this video specifically, we're going to go over the iShares Core Dividend Growth style ETF and talk exactly about what this ETF is, what it has to offer. But then towards the end of this video, I'm going to share with you exactly how much money you would need to invest into something like the iShares Core Dividend Growth ETF in order to receive around $1,000 or more in dividends consistently per month, year after year after year. Now, I promise you it's actually a lot less money than you probably think. It's pretty obtainable, so make sure to stick around until the end. So if you want to dig deep into DGRO, learn more about this one, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now it says right here on the iShares website, why DGRO? It says number one, DGRO offers low cost exposure to US stocks, focus on dividend growth, which basically means stocks that pay more and more in dividends over time, which gives investors like you and I more and more cash flow over the years. Number two, access companies that have a history of sustained dividend growth and that are broadly diversified across industries. Number three, use at the core of your portfolio to seek income. It then says investment objective. The iShares Core Dividend Growth ETF seeks to track the investment results of an index composed of U.S. equities with a history of consistently growing dividends. Now, I made it pretty clear on my channel that one of my favorite metrics when it comes to investing, and this is a metric that I came across a little bit later in my investing career, to be completely transparent, but the metric I'm talking about is specifically dividend growth, or basically investing into different ETFs and or stocks that have a history of growing their dividends over time. Now, I can't speak for everyone, but I don't have unlimited cash balance, so investing into different stocks and ETFs that pay me a set amount of dividends year one, but then are going to pay me more and more in dividends over time, that's going to be especially very handy later on in the future, and is definitely going to help me compound my portfolio much quicker. Now, looking into DGRO's top holdings, this is also very important whenever analyzing any ETF across the market. There's currently around 416 different holdings in DGRO, and some of the top names are things like JP Morgan, Johnson & Johnson, ExxonMobil. We also have names like Apple, Chevron, abbvie, Microsoft, Home Depot, Procter & Gamble, and Broadcom. Now, if you're personally a seasoned dividend investor like myself, you're going to look at these top 10 stocks, these top 10 holdings, and see a lot of things in common. And what I'm talking about is that all these stocks over time have not only traded up and to the right, but every single stock on this list offers a decent starting dividend and has paid more and more in dividends historically, every single one of them. So it's honestly no surprise that those stocks make up the majority of the iShares Core Dividend Growth ETF. Now, looking a little bit deeper into this ETF, DGRO's expense ratio is 0.08%, which is pretty cheap across the entire market for these sort of ETFs. That's basically the range what you would expect. DGRO's performance on the 1 year is up around 13.2%. Year to date, it's up around 12%. And on the max time frame, DGRO is basically right now trading at an all-time high. It's up around 141%, and this is since around 10 or so years ago. Now, we talked about the top 10 holdings a second ago that DGRO basically has right now, but as far as the holdings breakdown goes, this is also important, especially when assessing whether or not this might be the right ETF for your portfolio. Now, some of the top sectors are things like financials, healthcare, technology, industrials, and then a smaller portion of this ETF is going to be things like energies, utilities, consumer cyclical, basic material, and communication. Now, if you want my 2 cents, this is a pretty good sector breakdown, and I personally like the fact that financials, healthcare, and technology make up the majority of the ETF. A lot of the sectors over here on this side, although are things I have a lot of exposure into, for a younger investor, I think this is exactly what we should be going after. Now, because DGRO basically has dividend and dividend growth in the name of the ETF, looking through the dividend and the dividend growth historically, currently a 2.27%, almost a 2.3% trailing 12-month dividend yield, so about 1% more or less that than SCHD currently pays, but still not bad whatsoever. Around 2.3% isn't horrible. Now, dividend growth is very impressive when it comes to this ETF. This ETF has paid more and more in dividends over time, which I would hope so because, again, it's in the name. It's paid around 10.84% more in dividends over the last year, around 8.86% over the last 3 years, and around 9.3% over the last 5. So zooming all the way out, this ETF has paid around 9% more in dividends, which, just to give some context, around 10 years ago, this ETF was paying around 17 cents, 9 cents, or 17 cents. Now the last 3 dividends, 29 cents, 31 cents, and 37 cents. So not only has this ETF doubled, but basically tripled the amount of cash flow to investors over the last 10 years, which is outstanding. Now, before we go through the actual math and I share with you exactly how much money you need to invest and for how long to receive a consistent $1,000 on average payout from DGRO, looking a little bit deeper into this ETF's performance historically, with a $10,000 investment with dividends reinvested along the way back in 2014, so around 10.14 years now. That just $10,000 investment back in the day would have turned into $30,651, or a total return of around 206.48%. On average, that's around 11.6% per year, which is not bad whatsoever. And just looking at the chart here, DGRO has been so consistent basically since this ETF started trading around 10 or so years ago. But now to get into the real numbers, of course, you can go through a dividend calculator and change the numbers around and see what sort of results you're going to receive. But with a $20,000 starting investment to DGRO, $5,000 added on top of that every single year, a 2.3% initial annual dividend yield, 9.3% dividend increase, 4% annual share price appreciation, 30 years invested, and DRIP turned on, dividend reinvestment turned on, distribution frequencies quarterly. Let's see how long it would be until we receive on average around $12,000 per year in dividends. So going through the entire dividend calculator, it is going to take some time for the portfolio to really start compounding. That's because with a $20,000 investment, although it's a decent portion of money, it still is going to take a few years, even with that additional $5,000 contribution. But what's crazy is about 15 years in, the portfolio would already be worth around $160,000, earning just shy of $8,000 per year in dividends. And it would take around 18 years, more or less, for the portfolio to hit around $223,000 as far as principal goes, and around $12,200 per year in dividends, which averages out to around $1,000 every single month. Now, of course, there's different dividend paying ETFs across the market that with a $20,000 principal could potentially earn you a lot more in dividend income on a yearly basis. But keep in mind, with an ETF, a dividend growth style ETF like DGRO, you're not only going to receive a substantial amount of dividends, but with that dividend growth and with the fact that DGRO's share price actually has grown so much, this ETF not only is going to pay you a substantial amount of dividend income, most likely in the future, but also this ETF is going to make your net worth skyrocket. At least it has to investors historically. Now, just for fun, around 30 years down the road with a $20,000 investment, like I said, and around $5,000 contribution on top of that, 30 years down the road, we're talking $832,000 in principal and $83,000 per year in dividends from just this one single position. Now, of course, some of us are going to have more principal to start with, some of us are going to have less, and of course, the more you contribute annually to a high-quality dividend growth style ETF that historically has basically grown and paid more and more in dividends over time, it's probably also going to help things. But it just goes to show, with a relatively small portfolio, $20,000 and $5,000 or around $600 extra per month, this portfolio still has the potential, just going off the numbers we talked about, to grow like crazy, at least in the long term. So that, for the most part, is the iShares Core Dividend Growth ETF, DGRO, and more or less what this ETF has to offer. But now, lastly, most importantly, I want to hear from you guys down below. When it comes to dividend growth investing, what is your number one favorite dividend growth style ETF across the entire market as of today? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.